Right. All right. So this is October 23rd. It's a Monday, but I'm gonna. This is not necessarily a review. I've already done a review on the day. What I want to do here is I want to show you how to sort of put it all together and how you would play the day incrementally, and then how you incorporate the Rinko charts and then the rules. So I try to keep it down to less than 5 different rules. Well, I say there's really only like 3 rules, and everything else just comes down to timing. Um, that is what the market is. It's all about those timing to sort of know what a trend should end up doing. But first off, when you start your day, you really want to be looking at your 30-minute chart. So I'm going to go ahead and log that, which is the bull, and then I'm going to do the bear. So if you notice, we opened up right here. We were in between the bull and bear when it comes to the multi-day pivot. So this is multi-day on the left. I like to use it on 30-minute charts. It's always really good to have those to sort of know where you're at in reference to the market. So here you can see this is the first 30 minutes. I went ahead and just showed you the first 30 minutes so then we can see what it looks like on a Renko chart. So a lot of times when you have a Monday and you have a pretty volatile week before where you ended up dropping. A lot of times you'll have what is called a gap down reversal. So usually within that 15 or 30 minutes, you'll have a gap down, or it's not really necessarily a gap down. It could be a push down or push up, depending on where the momentum was the week before, and then a reversal. A reversal is pretty violent. It's trapping all those, they're closing positions, and they're trapping shorts or longs. So if you notice here, the first 15 minutes, because these are 5-minute candles, 5, 10, 15, it pushed right into that the bear pivot, and that's why it's important to have. And then you also had the mid-range ATR, and then after the 15 minutes was up, it ended up reversing and coming all the way back up, crossing over VWAP to the bull pivot. Bear pivot on the intraday ATR. So this is intraday ATRs and this is multi-day ATRs. And remember how you do that is you go to your SATI ATR levels and you go to input and you say day, which is your intraday, and multi-day is where it's best to use for your weekly levels. So once you do that, let's take a look at what it looks like on a Renko chart. So you open up right here at this line. That's why I drew it. You came up. The moment it comes down, and then it fakes out, reverses, and then comes back down. The moment it comes back down right here, you can almost say that you're weak. Even if it comes down pretty far, you look for some kind of pullback, and sure enough, it pulls back right to the low right here. Now, granted, it could have came back up here, but ideally you want to get in. You're looking at the bigger picture. So now you're below the bear pivot, and you want to risk to above. So that right there would be about 10 points for a potential big move to the downside. So that right there netted you within 15 minutes. If you played that the first 15 minutes, that was close to almost 100 points. Because anytime you go from the bull or bear pivot down to a mid-range ATR, it's 100 points. So once you got down here and that 15 minutes was up, you need to be closing your positions, and you need to think of time frames. So the first 15 minutes and the last, really it's the first 10 minutes, 10, 15 minutes, and then it's the last 10, 15 minutes of the day are where they're opening and closing positions, and it can get pretty volatile. So anytime you're pushing down into a support, you either want to start selling into your position and then possibly looking for that reverse. And you can see once we came down, came back up, the clue that we were going probably back up was right here when you see this push up, then the consolidation. So ideally, you want to start getting into your longs. Now, granted, this is a pretty big position right here to get long, as in it could have come all the way back down, and that's about a 30 point. But a lot of times what I do is I'd get in right here and then risk to probably down here. That would be about 10 points. And if I'm wrong, I'm wrong, and I just reassess. But you potentially could have a big reversal right there. Again, I probably would have been careful, because when you start seeing this, I probably would have waited for the first 30 minutes to end. But the fact that if you waited and just let all this play out, you have a lot of time in the day. And the fact that it came back, you see how it's above the bear pivot. That is super bullish. This should never have come and even touched this. This should have came to this fib level. You have these two fibs right here. Should never even got above that. The mere fact that it did, now it's above VWAP. So now you should be bullish. What are you aiming? You're aiming for that gap fill, and which would be the previous day's close. But anytime you go all the way down to your mid ATR and then you come back above the bear, the likelihood is this ain't going back down. So you want to start flipping your mindset to a push, a gap down, failed reversal. So here you're at the bear pivot, and now you want to go long. Again, if you missed all that, wait until the next TPO. So the next TPO is time period. So it's your next 30-minute candle. So if you just waited, you see how it came down, came back up, consolidated, came down, and really it never came back. So you could have gone long right here, and this was at 8:55, 5 minutes before the end of the period. It came up, you see that it came back down, but at this point, you should always now be bullish. You should be bullish. So the rules, when I say rules, is support is support until proven otherwise. Resistance is resistance until proven otherwise. And you wait for certain 30-minute periods to close. So what do you do right here? You wait for the period to close. It closed, and you're in between these two pivots. So you wait for an opportunity to get in to go long. So imagine everything above here, you're looking for it to push. You know, it may take a while, but eventually it should push. If this ever dropped back below here, like you would be looking for a drop to probably right here, then you're looking for some kind of momentum. It either is going to keep pushing or it's going to come back and retest this opening. If it does, then you are now, this is a failed push and reverse. But you can see right here, we're consolidating up here. A lot of times when you see a failed breakout reversal, it's usually a push and then immediately push back down. There's none of this like choppiness above. So this is telling you that they're building value up here. So let's take a look. Let's keep going and play out. Let's see. We'll go forward, 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 forward. You know, we'll go to the next TPO. And let's take a look. Okay. So right now you see how it did go from pivot to pivot. That is your target. So right here was your target. Anywhere right here, new TPO, and your next TPO would have been right at that 930, which is right here. You see how it slowly made its way up, but you should be getting out of your position. You should be getting long right here. So this is 10 points. You're risking, you know, you can either add, you want to start getting in, building your position, or you wait right here. I mean, if you waited right here, then now the move's already going, and it's sort of a bad risk reward. But you're aiming to right here. So now you exit your position and you wait to the next TPO, because you don't know. This could actually now push up, and you see what it did. It ended up failing below, and this candle was closing. But now, if you the key here is that first 30-minute candle. You see how I don't know how I can draw this. And do you see how this line is pushed up right here, and the close was right here? So what they call this is a hammer when it comes to technical analysis. Oh, I hate that now that I have to Um, hold on a second. Being able to delete these. But you see how this is a hammer. This is pushed down, recovered, and held above here. This now is major support. It should never come back. And remember, you're above VWAP. So what I would be looking for is any push down, I would be looking long. It's not until this breaks that I would actually be short. And it needs to push down hard. It said what it wanted to do once it came down, made a 100-point move, and it closed above the bear pivot. Now you're looking for any pullback, and the push really should be up to the bull pivot, because that would be your ATR move. So let's take a look. So what ended up happening, you had a lot of chop. It broke, it held, and then came back up. So I really wouldn't be looking for any shorts. I would, you could be playing this, but if you do, you need to really be cognizant of where VWAP is and also where support is. Support would be at the, this right here. If you notice this candle, this was the open, and it's just retesting this open. It opened here, it dropped, and came back up. Now we're holding this line. That's why this it's critical to sometimes put those lines there to know where your opening price is. So now that you know that this is open, even if you didn't play this and you waited until it got back above this ATR, you see that it never broke below. It went up, came down, went up, came down, and then it started making its way up. When did it start making it up? Let's look at a new TPO. So the new TPO period was at 10 o'clock. 10 o'clock was right here, right up here. So a lot of times what ends up happening, that the last 5 minutes of the period is when, so here's the period. You see how it dropped, came back up, consolidated, and then right here, this is the 9:55 Central Time. That's when they started making the run up. So you want to be positioning yourself for that next TPO, because a lot of times they do the run up in that last 5 minutes. So see how you should always be waiting for good support and resistance to get in. So right here, you know that it's holding, so you should be getting in and waiting for at least 30 minutes. That 15 minutes is good, but 30 minutes, you got to wait for the whole move. So look, if you notice, that was 9:55. When did it actually hit the target? That was about 10:15. So that would have been 20 minutes. So anywhere from 15 to 30 minutes, you should be waiting. This right here could have shook you out, right? So if you get in at a good spot and you just hold, you know, really you should have been selling into this position right here, because getting the whole move is difficult. But right here, if you would have sold, that would have been 10-15 minutes into the spike, and that's close enough. And any kind of pullback right here, you could have just let it go. So that's how you're playing your periods. You need to either draw your lines on your Rinko charts or be playing the chart. So let's stick to the next rule. What is the next rule that I always have? So are you below or above a bull pivot or bear pivot before 9:30? So check. What is this? This is 9 o'clock. So 9 o'clock, we are above. So we are now in the zone. So if we keep going, now you hit your target, right? Well, you get out, okay? So if I would have got out at 10:20 and hit my target, now what do? You exit your position. You exit your position until the next TPO. You want to be practicing getting into your targets and exiting, and it could keep going, but let's look at that next TPO. So at 10:30 is right here. So here's your next. So this runs up. Great. You make good money right here. This was 670. Really, this is 665. 670 is an easy target to remember, to 720. So what is that? 30, 40, 50 points right there. Good enough. So you see what ends up happening. You get out, you let things manifest, and give it some room to breathe. So now that you see that we're up here, and then new TPO, you can see we are just consolidating. So this tells you this probably now is above. So what is the rule? So the rule I always have is at 10:30, are you above or below a pivot? The European closes at 10:30 Central Time. So if you're above a pivot, now you want to be using that as support. It's already proven. If it was below a pivot, then you want to be using it as resistance. So a lot of times it loses its momentum and it finds its high for the morning if it's below a pivot. If it's above, it could trend it for the rest of the morning period. So if you notice right here, it actually shot up to a fib. These are the fibs, the blue lines, and then it came all the way back down, but it never broke the pivot. It right to the T, it held. So you want to be playing this pivot, and if you held until the end of the period, which would be 12 o'clock, well, I say it's between 12 and 12:30. I like to say 12, and then the 4-hour candle ends at 12:30 Central Time. So let's take a look. If you would have held right here when it came down to the pivot, it never came below once. And then you held for the 100-point move, and the 100-point move ended up happening. And let's see, where's the 12 o'clock candle? 12 o'clock happened right there. What did it do right at 12? It ran up until the end of the TPO, and then the morning session's over with. What did the afternoon session bring? It came all the way back down below the pivot, and then it never really came back above. So that's how you use the pivots. As I'll go ahead and exit out of this so you can see, but that's how you use your pivots, your 5-minute candles, your new TPOs. Where are you in relations to the pivots? Is it support or is it resistance? And then knowing your time frame, the morning session and your afternoon. I mean, I will preach this till the end. I see this day in and day out. So a lot of times what this is doing, this is running those stops, and then the new period ends, and then look what ended up happening the rest of the afternoon. Another 100 points happened in this period. This was a lot longer period than right here. This was about 320 points. This was 150 points. But really, this was 100 points from level to level. So let's take a look right here. How would you play this when you see a Rinko? This is what I mean by a push and fail. So this is a push over. It was a quick push. See, look right here. When it came over here, this was 11:57. So they ran this up. Remember what I said, the last 5 minutes. So they ended up pushing above the fib, and in 5 minutes, they ran this thing from 800 all the way to 850. So 50 points in 5 minutes. That's a big run. So you need to think, okay, new TPO, what are they going to do? They need to come back and retest that breakout. This is a breakout before the next move up. So if you also notice, you see how this line right here, this really around 14,800, this is the bull pivot. So that's critical on understanding the bigger time frame. So remember, we went from here to here, and you see this is the same area. If you notice, Friday, the previous day, that was the afternoon high. Because if you notice right here, this was 12 o'clock right here, 12 o'clock Central Time. So what did we do? They ran up, they pushed, they found the high. And so miraculously, if you notice on this week's multi-day pivot, that was also the bull pivot. So that's why you had the squeeze. Once it came up, broke above, it squeezed hard, and then they recovered and brought it back down below. They did not close this candle. Remember I said that 12:30. That is what tells you what the afternoon brings. The fact that they did not keep this above the bull or the mid-level ATR by 12:30, that tells you that they probably are going to find weakness and sell off in the afternoon. Plus, if you notice, you see VWAP was way down here. So there was a lot of reasons for it to come down. And so all I'm doing is I'm looking for that breakdown, I'm looking for an opportunity to get back in, which would have been the retest of this ATR. That would have been the perfect area. And if you notice right here, you see how it came down? It was a big push. They consolidated it, and then when they broke back above this this fib, that's when they took off. But this is when you want to start planning for the afternoon. And so you could have played this long and still got a lot of points. That's 30 points. But you want to be really watching this area. And the fact that this came back below, this is when you want to go short. So yes, you could have seen if this kept on pushing, and this would have been probably my oh shit moment of like, okay, this is a possible double top, because we've seen that before where they push up hard, come down, then push up hard, and then come down. But the fact that this came down so far, this should have not failed right here. If this came down, it's plus or minus 10 points. This should have held and then kept on going. The mere fact that it came down almost 80 points. No, this would have been, see, 850 down, 750. That would have been 100 points. So yeah, this is around 70 to 80 points. That's huge. For that to recover, to the upside, it probably was not going to. The odds are not in the favor of that happening. So look at this. So this is what you're considered like a halfback from this move. And when a halfback happens, it usually creates a lower high. So that's why I was confident that you could have go short right here. And then once it started like finding weakness, the moment it came back below that 800, remember 800, that was that multi-day pivot. You can safely say that's going to now be resistance. And you could have held. And this was a new TPO. This was 1 o'clock. And so you had 2 hours left in the day, or I say 1 o'clock. This was 2 o'clock. So 2 o'clock is the last hour of the day, and so they ended up dropping it all the way down to VWAP. But the move to get in was right here, and your target was right here. And look how long it took. It took every bit of about, well, how many candles this is? 1, 2, 3. So about an hour and a half for it to get all the way down here. All your job is to look for good risk rewards, and then sit on your hands. Other than that, you get chopped up anything in between. Because yeah, look at this. You could have got this push, but you know what? If you got stopped out, now you're trying to get in here, and you're risking 10, 20 points. I mean, this right here was the move to get to short, to exit out of your position, and if there happens to be a retest, this is your ultimate like last chance of getting in. But I would not expect it to come all the way back up. It's had its chance. So with NQ, when it has its chance to, you can see lower high, lower high, lower high. And then for an hour, it chopped in between these two fibs and then slowly made its way down. I mean, this right here, you don't want to play in. The easiest way to trade is to get in at these moments, set your stops, and then put your target down here and walk away. Walk away and come back an hour or half an hour later. Put some alerts, along the way. Other than that, that's what I would be doing for afternoon. Morning, if you play morning, that should be your money maker. Afternoon should be your icing on the cake. So you should have made all your money right here at this 100-point move or the 50-point move. You should already been done. This right here should have been one contract. You either make money or you lose, $100 or $200. You get in right here, you give yourself enough room, and then you hold for the bigger picture. That right there, one contract, $2,000, that would have been icing on the cake. But that shouldn't have been your major move. If you play scalps, it's gonna be a lot more challenging. Yes, you can make a lot of money scalping, because look at this, you could have got in, got out, got in, got out, got in, got out. But who knows? This could have kept on going, and you could have gone long here and got stopped out, and then try to go short here and then got stopped out. You're playing in the middle. Playing in the middle is really difficult. That's why I really like playing in between the bull bear pivots. And see, this was the previous day's close, because here you're going to find out within about 15 to 30 minutes, whether you're right or wrong. When you play right here, you're having to wait at least 30 minutes to an hour and a half for the play to actually manifest or not. It's, I mean, the only rarity would be like openings, which we saw this morning, where you had almost 100 points, or this was 100 points from right here, 620 to 520, and that was in 15 minutes. So that's how you play your ATR strategy with your TPO time periods, with Renko chart, and you see how it's just a lot of vibration. You know, it's a lot of up down up down up down, but it's so much easier to get in and then filter the noise, filter all this, and not even look at this. And all you're playing is from here, and then you're selling whenever it hits that target. You want to get in as close as you can to these pivots, and you want to be able to tell the story and make sure you don't get faked out. You see how this came up, this consolidated above, then broke back down, you know, but the mere fact that it came back up should have told you that this is strong. This should never have come back above the pivot. So then you flip. So that's the hardest thing about trading in emotions, is being able to flip. But you get in at major pivots and you just hold. I got chopped up a lot because I ended up getting in that scalper mentality. The best thing you can do is literally just walk away and put an alert. When the alert goes off, that's when it should alert you of when you need to be paying attention to these levels. I'd rather lose money around these levels than losing money in between. So use VWAP. VWAP helps, but really if you didn't have that and you were just playing levels, look, push up, fail, held, this right here at close, this should tell you. This scares a lot of people right here, but use this, think of it as a wall, and now that is your afternoon play. Same thing if you look at yesterday. I don't have the 30-minute candles, but you see how you have this right up here. You had the opening. Right here you would have shorted. You would have profit take, and then this is a bonus. And the fact that it came back up, you want to go long, but then you want to be looking for patterns. And again, this was a pretty volatile day. We were already going to ATR. Once you break right here, now you want to be looking for you. There's no reason to go long right here. It's already showed its cards. The possibility of this could bounce back up before it comes back down. But you want to be doing is building your position. It's safer to wait until you have candles underneath, and then this turns into resistance. So that's sort of in a nutshell some technical analysis, but also how you play with your pivots and your Rinko charts. And really, Rinko charts there to sort of help you get sort of those precise entries. Because if you notice right here, these 5-minute candles, they're not valid until they close. So what you're not seeing is in 5 minutes, this can be going up and down, up and down, up and down, up and down. You know, it could be standing up here and then come down here. And so it's having that patience, you know, winning to wait for it to come down here. And look, sometimes it never does. See how it stayed up here and it never came back down? It doesn't have to. It found support and then pushed up. It's a lot harder to trade in the moment, but the easiest way to trade is to not fear these levels and get in when it's support. Give yourself enough buffer room, and then if you get stopped out, then don't get back in. Wait 5 or 10 minutes. Wait for it to show you what it wants to do. Is it just sort of a faker down, or is it wanting to go back up? All right, so that is the lesson. This is a good example for you have a mid to mid play, but really how you play these reversals and how you play from level to level, and then how you look for reversals and how you play your morning sessions and afternoon sessions.